Good morning. Welcome to Stock Market Today, Tuesday, March 12th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. And if you're on StockTwits, I'm there as well. Same handle, at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. You can follow along with this show, as well as receive daily stock ideas to consider, all in your inbox before the market opens each trading day. So U.S. equities were higher in Monday's trading after falling in the previous 5 trading sessions. All sectors finished higher on the day. The NASDAQ was a standout, rising more than 2%. Treasuries were weaker across the curve, although the 10-year yield ticked up slightly to 2.64%. The dollar was flat against the euro and yen, but weaker against sterling. Gold down 60 basis points. Crude oil was higher. WTI rising 1.3% on the day. Your outperforming sectors: tech, comm services, REITs, and energy. Utilities, industrials, financials, and healthcare underperformed, but as I said, all finished higher on the day. As we get to the desk this morning, S&P futures are down 10 basis points. Asian equities were higher overnight. Japan, Hong Kong, and China all up over 1%. European markets are mostly higher as well, though the gains there are a little bit more limited. Treasuries were weaker across the curve. Dollar is stronger versus the yen, but weaker against the euro. Gold up 50 basis points, and WTI crude adding on, up over 1%. So as we look at the S&P 500, really over the course of the past week and a half, we've tested the high end of the recent range, resistance. We've tested the low end of the recent range, support. So we've now had a strong rally from support, and the question is, will we break 2820 to the upside? Support remains in the 2725, 2750 zone, then near 2700. Resistance 2800 to 2820. Look for RSI to hold within bullish ranges. So far, so good. We've drawn the line here at 50. Notice that we pulled back to test support. RSI held 50. Bounce, bounce. Chaikin money flow is bullish. This, to me, increases the odds that we're going to break out through 2820. Is it going to happen this week? I don't know. Could we continue to chop sideways? Absolutely. But I think the stage is set based on the indicators that we're looking at, based on the near-term trends, based on momentum, that upside 2820 is likely to be broken sooner rather than later. I'm not saying it's going to happen today. I'm not saying it's going to even happen this week, but the odds favor it. So what are we doing? We have our lists of stocks that are bullish and very bullish. And when those stocks in leading parts of the market, think tech, think semiconductors, become oversold, then we're looking for opportunities to add them to the portfolio. So now your market in a minute, S&P 500 stages a strong rally from support. We hit that. NASDAQ adds more than 2% to lead U.S. markets as tech builds on its leadership position. It's Tuesday, relative strength day at the sector level. We take a look. Relative strength in semiconductors is a bullish tell for the market, in my opinion. Futures point to a lower open today. Slightly lower open. Chaikin power bars, nice reversal for the Dow here. 8 bullish or very bullish stocks, 4 bearish or very bearish stocks, as it added 77 basis points, weighed down by Boeing, which was down 5% yesterday. 136 bulls to 67 bears. Improvement for the S&P 500. There's your NASDAQ outperformance. 27 bulls, 16 bears. NASDAQ added over 2% yesterday. Small caps outperformed as well. 474 bulls, 351 bears. Bonds downtick slightly. Tech was your big outperformer. Remember last week when we did our relative strength work, we upgraded tech to a bullish trend from neutral, and that has continued this week. 25 bullish or very bullish stocks, 7 bearish or very bearish stocks within the technology sector. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Your stock of the day here today, Taylor Morrison, TMHC. Construction and building services stock up 3.5% yesterday to close at 1738. Has a very bullish power gauge rating due to very attractive financial metrics, very strong earnings performance, positive export activity. Technicals are weak, and we can see that on the chart. Very bullish stock, strong trend, strong industry group, type of name we want to consider. But does it make sense to consider it today? And I would argue that the answer is no. Why? Market and model not in agreement. Bullish rating, underperforming. Dynamic duo not in gear. Not exactly overbought, not oversold, so kind of middle of the range. Chaikin money flow, more bullish than bearish of late. Now, we have regained the long-term trend line, but it is declining. I'm just not there on this name. Remember, these stocks are auto-generated based on the rating that I run through the analysis to make sure it makes sense on a technical and tactical level. And right now, I don't think it does. There are better names out there. We want to own names that are outperforming the market, not underperforming the market. Add it to a watch list. Keep an eye on it, right? Because strategically, it makes sense, but it's not there yet. Take a look at it. Keep an eye on it. Don't do anything today. Sector tracker now, moving to the major sectors over the last 5 days. Still has that defensive feel at the top, right, with real estate, comms, and utilities. Materials, remember we've been talking about materials. What we've been saying about materials, as well as for energy, is that the downside momentum to the relative performance of these sectors is waning. Now, we're starting to see a bit of an uptick in materials, not quite there in energy, at least not in the near term. But what I would say is this, those weak sectors where we've been able to isolate bearish ideas, it's not as, the pickings there on the bearish side are not as juicy as they used to be because that downside relative momentum is waning. Now, that doesn't mean you go out and start buying energy stocks and material stocks, not yet. Start to build lists, start to look at these names, it's starting to make sense. I'm not there yet, but I'm also not as bearish as I was. Tech, want to see that one continue to do well. We're going to take a look at that chart. Financials, relative strength, just not there. Healthcare continues to bleed out on a near-term basis. Actually, if you look at healthcare relative to the S&P 500, it's now testing its 200-day moving average. Our industry in focus today is actually, it's fortuitous. Again, this is automatically generated. But I'm focused on semis in my note today, so we'll focus on them here as well. Nice, that's coincidental. Over the past 6 months, semiconductor subsector has outperformed the S&P 500 by nearly 5%, and its power bar ratio, which measures future potential, is strong. 11 bulls to 4 bears, ranks at 7 of 21 subsectors. It's moved up 1 slot over the past week. Some indicative names there, Rambus, RMBS, Intel. We looked at Intel yesterday. I wanted to see how the stock traded around the NVIDIA for Mellanox deal. Stock held in. I think Intel looks compelling. On semi, as we're going to look at now, has a bullish rating. It's actually my bullish stock of the day in my note to Chaikin Analytics clients. Let's look at why. Bullish stock, strong trend, strong industry group, fishing in the right pond. Bullish stock, outperforming the market. So the strategic setup is there. This is the type of name we want to consider owning. From there, we look to see if the tactical setup makes sense. And I would argue that it does. Why? Stock is oversold, and the indicator is beginning to round higher. Money flow, predominantly bullish since mid-January. Above a rising long-term trend line, and actually triggered a relative strength buy signal yesterday. I like On Semiconductor on the long side. I think it's a name that investors should be thinking about gaining upside exposure, however you choose to do that. Buy the stock, look at call options, look at bullish vertical call spreads. However you choose to express your bullish view, I think that On is a good risk reward to the upside, and you can add Intel to that list as well. Yesterday's S&P 500 gainers and losers, NVIDIA. NVIDIA is buying Mellanox. Investors like the deal. Up nearly 7%. Align, some positive comments from a sell-side analyst following meetings with management sent that stock higher by nearly 5.5%. Seagate, no real news to send that one higher. Weyerhaeuser, WY, caught an upgrade, sends it up 4.75%. And Valero, likely rallying with oil up nearly 4.7% on the day. Now, Boeing, down 5.33% following tragic news of another crash of one of their planes, and then follow-up commentary from different countries saying that they are going to ground those planes. Stock was actually much lower at one point yesterday, down about 13% near its lows. Closed the day down 5.33%, but put the trading aside. It's a tragic development. Eli Lilly, exchange offer for Elon, stock down 2.5%. HBI and Disca, no real news to send those names lower. Comerica lowered deposit growth guidance ahead of their analyst meeting today, sent that stock down a little over 1% on the day. So let's dive right in now and talk about what we're writing in our note today. It's Tuesday, as I said, so we look at the relative strength across sectors, look at who's leading, who's lagging, where the changes are taking place. And last week, we took health technology from a neutral trend to a bullish trend with the break of the 200-day moving average here, and it's continued over the course of the week. We're looking at XLK, tech sector, relative to the S&P 500. So we can see here, we've broken the downtrend. I'm trying not to crowd the chart, but we are above the 200-day moving average. What's interesting to me is during this consolidation and pullback, RSI never really hit those oversold levels at 30, and now we have a series of higher lows as the RSI indicator works towards overbought levels. That to me is bullish momentum confirmation to this change of trend, and signals to me that odds are that it's likely to continue. Why is that important? Because tech is the largest weight in the S&P 500. When the largest weight in the market is outperforming, that's probably bullish for the market. We can see here on an absolute basis, XLK working on breaking through resistance. So tech is a group where we want to focus for our long ideas. And within technology, we want to look for the leading industry groups. And one of the industry groups that you've heard me speak about over and over again, because it is so bullish, is semiconductors. And I think relative strength in semiconductors is bullish, number one for semiconductors, and number two for the market in general. So we're looking at the PHLX Semiconductor ETF, ticker SOXX. Rally, pull back to the 200-day moving average, which acts as support, and then a rally from there. But what's interesting to me is look at the shift again. Here's momentum, right? Notice that when semis were weak, they were easily became oversold, and rallies could not move the RSI into overbought levels. Now, as the SOX rallies, look at the momentum shift, and pullbacks within the fund. The RSI has found support at the 50 level. That's what we mean when we say momentum has shifted to bullish ranges. That's what we're seeing here. That is a bullish confirmation to the price strength that we're seeing. And on a relative basis, here's the SOX. We had a breakout back in late January, and it continues to work its way higher. To the extent that the semiconductors are outperforming the market, that is bullish for the market in general. They tend to bottom and top ahead of the market, and that seems to be playing out this time around. Look at when the relative trend in semis bottomed. Back here in November. Market bottomed back here in late December. So the theme is playing out. The trend continues to play out. Watch semis here. Strength in semis is a bullish tell for the market. We gave you intel yesterday. We're giving you on today. Types of names you want to consider. Look for bullish and very bullish semiconductor stocks that have become oversold. Utilities, on the other hand, are near-term overbought. Now, this is a group we've liked. We've isolated some really good ideas in this group, but right now, we analyze the market as it is, not as we hope it to be. Here's the utilities. Nice breakout. RSI is oversold. Now, is overbought rather. Utilities are overbought. Now, this is a bullish confirmation, but we can't rule out some near-term consolidation. On a relative basis, they continue to lead. I think this is largely a function of yields. But regardless of what the function is, utilities have been outperforming. They continue to outperform. I think in the near term, it's a little bit overdone to the upside. Look for a consolidation. Don't necessarily think I'd be chasing utility stocks here and now, but trend remains strong. Look for opportunities on pullbacks to buy bullish and very bullish utilities names when they become oversold. And we talked about the momentum waning, the downside momentum waning in energy. Here's what I'm talking about. This is XLE relative to the SPY, right? Nice, steady downtrend. All the while, RSI stuck in bearish ranges, becomes oversold. But now, as we've bottomed, look at what happened here. The low in the ratio did not make a lower low in the RSI. And now as the ratio has gone sideways, we're actually seeing the RSI begin to shift higher. That tells me that bullish momentum is waning. Now what we're going to wait for is a breakout to confirm, and then we can start to think about looking for some energy names which are leading the market. So that's going to wrap it up for today. Sign up for the email, chaikinanalytics.com/today. I will see you back here tomorrow. Have a great day.